Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. It's great to be back. This week's Beers is brought to you by one of the classic acts, I should say, of the craft beer circuit. Let's crack it. Quality. Why do we need quality? Because this week we've had more rate rises from here and abroad. Yep, the Fed's Jerome Powell unambiguously saying we ain't done yet. Yep, markets rallied on the initial news of the 75 basis point rate rise, then abruptly sold off on his statement, effectively declaring that interest rates were still rising because inflation is still peaking. And everyone wants to know when the rate rises will end. Well, that all depends on inflation, doesn't it? We have to see inflation peaking, and unambiguously so. And as I keep saying, with official overnight rates in the US 3.75 to 4%, here 2.85%, was a long way with GDP, nominal GDP growth or demand, the proxy for demand surging at 10% plus with limited supply. So they're still going to be putting the brakes on. That's why you come here to Beers with Rich, to get some respite. After all, inflation's around 8%. So there's a bit of a gap. So what do? Well, young Henrys. Basically, we have a two-pronged approach. Both prongs rely on the value philosophy. Why is value so important? Because it means you're not surfing trends. Anyone who says they know where the market's going to go or market predictions are lies. They're lies. Falsehoods. Your only security, people, is in picking stocks. That's where it starts. That's where it ends. So, what do you base that stock picking on? Fundamentals. I keep saying it. P&L, cash flow, what companies produce, and what's backing them up. Yep, their balance sheet. And you work from there using a consistent set of criteria. On the one hand, of that pronged approach that I mentioned before, we have blue chips. This week we did a rebalance of our blue chip portfolio, which has been shooting the lights out at 14.5% a year for the past 2 years, more than double benchmark. So we show you how to reduce your risk in 5 easy steps this week, as well as a revamped portfolio. That's the first prong of the two-pronged approach. What's the second? Well, small caps. You need to own them. This week, Carbon Revolution received a bid from a SPAC of all things. Special Purpose Acquisition Company, I think it stands for. This could be a part of a trend with Aussie small caps, being hunted down like lions outside of the enclosure. This US-based phenomenon is pretty dicey. Basically, these companies raise money, the corporate types to pump with, and then the investors decide whether or not to invest after they've come up with deals. Another one we heard of recently that's been hunted is European Lithium. I think we had a look at that one, but we passed on it. But clearly there's appetite out there. There's still firepower out there with the literally trillions of dollars owned by hedge funds. I mean, Carbon Revolution was picked up by our analyst in June because of its innovative lightweight wheel technology. I can honestly say I have my doubts, but who can argue that makes cars faster, lighter, and more fuel efficient? Not me. Seriously, we liked it because 20% of its valuation was cash, and wheel production was forecast to double over a few years. And the company, by memory, was generating around 45-50 million in customer receipts, sort of just washing its face, but trading on a very low sales multiple, 1 or 2 times. Compared to 4 times for a more seasoned operator like ArbCorp in that kind of realm. But I admit it's on the more speculative end of the spectrum. But over the years, I've always found that owning, a few of these speculative stocks can pay off big time. I mean, really, these are like irons in the fire that mean that you're not overly linked to the market, because these stocks, they ebb and flow irrespective of what the market does in a general sense. And in this week's report, we cover two outstanding opportunities, I must say, if I don't say so myself. Let's have another sip of Young Henry's. So one's an electric moped manufacturer out of China. I'm actually really surprised by the numbers coming out of this company. I mean, they've had a few strategy changes. At first, they were trying to sell to the Chinese, and then they moved to a more international strategy where they're getting bigger margins. This has actually proved a game changer for the company. When in doubt, just say game changer. But basically, they're getting a share of the sharing market, the delivery market, and now they're getting that higher value premium moped. I mean, it really is. If this isn't a product for the times, I don't know what is. I mean, basically, try getting a park anywhere in the city. You can't get one. Fuel's going up. It's expensive. Let's face it, you can't always rely on public transport. I might get one myself. That's right, beers people, you heard it. I might get one. It's going to be a bit hard to cut the kids to sport though. I think this might be a solo purchase. Then there's AVA Risk. I've mentioned AVA Risk a few times because, I mean, let's face it, this company delivers. I mean, half of the current share price has already been delivered, the equivalent of half in dividends and capital returns from a successful business sale. So that's what you want. You want people, you want managers and boards that you can trust in this time of uncertainty. These guys have a good perimeter technology. They have some irons in the fire, and they've said, okay, 35% of EBITDA is going to be paid in the future in dividends. So they've got a good track record, and that means a lot. It's worth checking out. What's coming up? Well, we've got another lithium developer coming your way. Let's have a toast to that. Battery charging all the way. As well as a technology stock we're commencing coverage on. Who knows, it could be another carbon revolution. The beer, let's get on to that. Young Henry's motorcycle oil. Wow. Look, I mean, in these sort of times you need fortitude, and fortitude you get in here. You need to hang on for the good times, because our experience as value investors is that if you get the fundamentals right, over time you'll be rewarded. Cheers. Speak to you next week.